Hey everyone, welcome to today's Steady Trader video. Over the past couple of weeks, we received a lot of questions asking us about risk management. How do we measure risk and so on and so forth in trades? And so what I thought about is I would show you the safest of all trades that I know and then tell you how I'm going to teach you more about this a little bit later on this week as well. And the best example here is actually in Starbucks, and we'll look at the chart here in just a second. And you'll note that shares of Starbucks have actually dropped quite severely over the past, the past couple weeks or so. And even though the stock didn't drop a whole lot more when we entered the trade, we actually still ended up making 17.7%. So let's just get right to it. So the trade that we did here, we set out the real-time declines. As you can see, we closed it off here, entry date, exit date, and we made 17.7%. The question is, how did we do that? So let me show you why this is the safest trade that I know. And this is the trade that I consider. Oh, my camera's dirty once again. Let's wipe this a little bit. The reason why this is the safest trade is the following. Okay, and by the way, these are exactly the kind of trades that we do for a lot of the high net worth clientele and advisory and coaching and all that kind of stuff. So here's shares of Starbucks to give you just a little bit of perspective before we even look at this more detail. And I'm going to make this a weekly chart so you can kind of see it a little bit more zoomed out and you can see what's happening. Well, simply put, technically speaking, you can see the stock here had a big base. It started to put in a head and shoulders pattern. If you're familiar with the technical terms of it. Left shoulder, head, right shoulder, and we have sort of a neckline here, if you will. That would be sort of your neckline, right? And we broke below it here with a vengeance. And we actually broke below it here on the 200-day moving average as well. That's 200. That is the 200-week moving average, even more so. So we broke below the 200-week moving average, and so as all that happens, we went ahead and we did a very specific trade, making a bet that the stock simply isn't going to rally a whole lot from here. We didn't say that the stock has to continue dropping at this rate, and we entered the trade about here. This is about where we entered the trade, or actually even a bit lower, I think about here. Okay, just visually, just look at the optics here, right? Now you would think, and after you've had a drop like this, usually it's not a great idea to start making a short side bet. But the bet we made is that the stock simply isn't going to rally much above like this point up here. Let me just kind of draw that in. So instead of making a directional bet, we simply said the stock isn't probably going to rally a whole lot, or isn't going to completely rally against us and go back above this spot here. Now, the reason why this is such an amazingly safe trade, and this is by far the safest trade I know, for 17 years, folks, we are making out of 10 trades, 8 or 9 are winners. Nothing's perfect. You're not going to get 100% hit rate, but 8 or 9 out of 10 any given month is amazing. And the risk is so small in these trades, the way we do this, that it's still, after 17 years of doing this, absolutely blows my mind. And Pat, in the third quarter just now, we made 2% every single month on the portfolio, just on this, on the entire portfolio, just with this strategy. And so the reason why it's so low risk, I know I haven't said that yet, is because we're taking a very little risk on, and we're structuring the trade using options that expire a couple months out, and so we're not making a directional bet. That's really why it's such a safe trade, because we're not making a directional bet. We're simply making a bet where the stock is most likely not going to go. If you would have made the bet that the stock is going to drop more, if you would have bought a put or a put spread or shorted the stock, you may have made some money, but we made with very, very low risk. We still made 17.7%, and we didn't short the stock or anything up here. We entered a trade here, okay? And the stock only dropped a few more percent since, like 3-4%. So anyways, if you guys want to learn more about this, please join us this Thursday, June 28th, 7 p.m. New York time, 4 p.m. Pacific. We're going to show you exactly how this works. I'm going to show you guys all the details and intricacies so you can start using this strategy in your trading and investing. The link to sign up for this should be down below in the comment box, also in the email that you received this in. And that's it for today, folks. Have a wonderful trading day. I'll see you guys tomorrow.